Hi everybody, Jeff Yastine here. Make sure to keep sending me those emails. The address is jeff@yastine.com. And of course you can follow me on Twitter and on Facebook as well. So I wanted to talk to you today about a stock that in Monday's session, yesterday's trading session, was up more than 30% at various points. And since I started talking about the stock over the past month and a half or so, almost 2 months, the shares are up more than 90%. And the news was quarterly earnings that came out on Monday. And I want to just sort of run through it as to how you can use this sort of thing to help identify stocks that can shoot higher. So the name of the stock is Ehang, symbol EH. So Ehang, you'll recall, is a manufacturer of drones. And it is most notable for a drone that it calls the EH or Ehang 216. It is an autonomous two-person passenger drone. Obviously fully electric. It has a flight time of around 25 minutes and a fairly decent payload since it can carry 2 people. But the key here for the company is the Ehang 216, which it calls an urban air mobility solution. You know, the idea of people, especially in the crowded cities of China, but really all over the world in metropolitan areas where it's increasingly difficult, at least before the pandemic struck, to move across surface roads and of course mass transportation, and the ability to get in an autonomous vehicle like this and fly from spot to spot from one side of the city grid to the other is pretty revolutionary in terms of not having the costs associated with it like you would in a place like New York City, going from, say, downtown to uptown, that sort of thing. So with Ehang, the news yesterday was that they came out with their third quarter earnings report. And it's worth going over here, if only just to point out some of what I think are fairly good fundamental things happening with this company. One is that they reported total revenue of 71 million renminbi, which converted to dollars is around $10.5 million. The key here, though, is not the absolute number, it's the growth, up 104.3% on a year-over-year basis. When you talk about growth stocks, obviously the faster the revenue growth, the more promising it is for the company's overall story, if you will. And obviously there's a lot of other things that have to go right in terms of costs, and obviously you want a company that can convert that revenue into cash flow, into profits. But the first part is obviously having a really fast-growing basis for the revenue side of the business, and certainly Ehang has that. The other element here is what accountants call gross margin, which was 59.2%, an increase of 4.3 percentage points on a year-over-year basis, driven by optimized cost structure of certain products and a change in revenue mix. Why are gross margins important? Gross margin is the percentage of money that a company has left over when it makes a sale and subtracting basically marketing and research costs. So the higher the gross margin percentage number is, the more money a company gets to keep that it can then plow back into other parts of the business. It's not cash flow, but obviously companies with good gross margins are on a good pathway towards cash flow, and that's obviously the next step beyond getting to profits. So with Ehang, they're getting to that level, because the other aspect of this is operating losses. So when it comes to operating losses, the company said the operating loss was for the third quarter was 1.8 renminbi, which is 0.3 million, so $300,000, shrinking from an operating loss of 10.6 million renminbi in the third quarter a year ago. So again, that points to something very important here. When you see a company crunching its operating losses by roughly 90%, obviously there is demand for the product there, and it has an improving product mix in terms of being able to produce more of these passenger drones. And the sales numbers, don't get me wrong, the sales numbers are still very, very small, but the pathway is open for the company to be able to ramp this production higher. So that's another aspect of the press release here, when it talks about business highlights. To me, the key element here is that they talked about they're building or planning on building a new AAV, that's autonomous aerial vehicle production facility in China's Guangdong province. And that factory will expand their current facility in Guangzhou and will support the growth of the air mobility business in China with an initial planned capacity of 600 units of passenger grade passenger drones per year. Again, that's important. Right now, the company's producing drones in the like a few dozen a year. So ramping up to 600 is a pretty big deal for this firm, provided everything goes right. And of course, there's a lot of things in the background that have to happen properly as well, right? The global economy has to move out of the COVID crisis, and we're sort of in the early phase of that with the vaccines going on. And of course, there's tensions between the U.S. and China as well. But at the same point, Ehang is selling its, or hopes to sell its drones to a global audience, and has a whole business model set out for how it's going to introduce that to the global economy, if you will. And one aspect of that, which I like, is that the company's been doing demo flights in various world capitals for the past handful of years. So the company's well known in China already for its demo flights. More recently, though, the company did a demo flight in Seoul, South Korea, and the company also did a demo flight, an unmanned one, but it did do a demo flight in North Carolina about a year ago, in which they were also sort of demonstrating their product and how it can be used to solve both using drones to move freight, but also to use drones to solve this problem of moving people in pairs or singles around a crowded city grid element. So this is Ehang's stock chart, and the company came public basically almost a year ago. And as you can tell from the chart, basically the stock has gone sideways it went sideways for the next 11 months and was plumbing its post IPO lows as recently as July and early August, late August and early September, as well as late September and early October, and then once again in late October and early November. So that seems to be where the support for the stock tended to wane. What I find interesting, and the reason why I recommended the stock, or one of the reasons I recommended it in mid-October, was the fact that every time the stock came down to these lows here, it seemed to always catch a bid after a handful of days and did not go through those support levels. I think that's important. The more a company, or in this case a stock, can move to those support levels and then move higher again, shows the strength of those support levels. And the fact that the stock did so one more time in late October, early November, before then suddenly just ricocheting higher, kind of shows where the promise of this company is at this point. And of course, then I recommended the stock in mid-October, and since then, yeah, it's up, as I'm telling you about this company now, it's up about 90%, but earlier during Monday's trading session, it was up as high as 106% since I did that video. The other element, though, I want to point to here are these bars at the bottom. These bars are showing volume. And if we go back here to mid-September, you can see one large day of volume, and then some other little bits of volume here. Then suddenly here is where volume really begins to swell on this stock. And as you can imagine, when you see that kind of volume coming in for shares that do this initial pop, the best time to buy it is if you haven't bought it early, like I was doing here with this video, is buying it during these flag patterns. You'll see a pop, the stock will move sideways like this one did, another pop, another move sideways, and then this bar here. So overall, that's the key here. When you're buying these stocks that are in these nice uptrends, buy small. Anticipate the fact that they could backtrack some, and if that happens, it's not going to ruin your day, right? Buy small, give the stock time to move around and to slowly work its way higher. It might happen faster than you imagine. That's always a good thing as well. But the idea is to sort of get in line, right? Buy your initial position, buy it small so that the stock continues to move its way higher, and you're not going to be scared out of the stock if there's a backtrack for reasons pertaining to the stock itself, or again, if there's some sort of scare in the overall stock market. So I'll continue to watch this one in the weeks and months ahead. I'll let you know how it goes. Keep following along there. And until then, again, remember to send me more emails. You can also follow me on Twitter and on Facebook. Until next time, I'm Jeff Yastine.